Hi, I'm Erik, CIO of the Wealth Plan Group. I'm recalling a time over 3 decades ago now when I was meeting with an investment management firm out of the Midwest, big, pretty successful firm. And I was, in the course of my due diligence, you meet many people. And during this particular research meeting, I had about an hour set away with the head trader for this firm. And the trader made a comment to me that just stuck with me, and that was, he said, Erik, there are really 3 ways that you can invest in stocks, or 3 lenses that you can look through. If you're a stock investor, you can play the markets, you can play the stocks, or you can play the players. And I thought that was very interesting because it reflects the multifaceted nature of investing. And what does that mean? And so the first thing you can say is, well, if you're playing the markets, you have a different lens through which you view stock ownership. You're just thinking about, to what extent is this exposure to stock allowing me to capture what the stock markets provide? And so long as those markets are getting you what you want, you're pretty happy. You might say, well, I'm going to play the US stock market, or I'm going to play the international equity markets, or the emerging markets, or the small cap markets in the US. Whatever the case may be, you're using a very different investing instrument if you're trying to play markets than the stocks that you happen to own. Now, some people might confuse the things, right? And they might be holding stocks, but they're really trying to play markets. And how does that jibe or mesh? So having some clarity about why you're investing to begin with has really significant implications for then how you manage money and how you vet information and how you think about things. But if you're going to play the stocks, this is another view that says you're going to have to be very attuned to the operating fundamentals of those companies, whether it be their competitive advantages, their strategic advantages, their tactical advantages, the industry they operate in, the likely effects of earnings, their business model on earnings 2 and 3 and 4 quarters out, what your revenue estimates are. And so this is all what we call fundamental investing, or very granular approach to figuring out which stocks you want to be in. And it also brings to mind the idea that, a great stock is not necessarily a great company, and a great company is not necessarily a great stock. So when you're evaluating a company for investment, it could be that the company is fantastic, but it's very richly priced. And so the expectations are stratospheric for the stock, and maybe you don't like the stock, but you have deep respect for the company. Anyway, all of these issues regarding individual company operating fundamentals, the balance sheet, the cash flow statement, the income statement, all of these come to bear if you're playing the stocks, and you have to be very good on the fundamentals. And then the last thing we talked about was, if you're playing the players. What does this mean? It means it's an acknowledgement that markets are a closed system of a bunch of individual participants doing things. And if you can figure out what the players are going to do, either with an individual stock or a sector or whatever the case may be, you're trying to engage in a form of psychology where you're trying to understand what the masses of people are going to do in aggregate. So you don't have to be necessarily attuned to the fundamentals. You just have to have a strong feeling for where the herd is going. And if you're above average at doing that, you might have an edge. You might have an ability to add value by anticipating future moves of the players or playing the players. And there's really no right or wrong answer here, but they're profoundly different skill sets. If you're playing the markets, you're going to be a macro thinker, a top-down economist, probably more than anything else. If you're a bottom-up fundamental analyst, you're going to be playing the stocks, and you're going to be all over the balance sheet, income statement, competitive landscape, the business model of the company that you're evaluating. And if you're playing the players, you're going to be into the psychology of investing and trying to stay one step ahead of where you think the herd is going. And that's really the idea of playing the players. Now, all of this can come into play for any kind of investing, but it's, the implications of why you're in an investment and what you're looking to get out of it has implications for the kinds of things you need to evaluate and the data and the information that you need to be on top of in order to make an informed decision, given the way you're managing the money. On top of this, so say if you're going to be a stock picker and you're going to play the stocks, obviously you can be what's called a top-down stock investor, where you take into account the macroeconomic setup first, and then you kind of work your way into which stocks you want to be in based on your macroeconomic outlook. So right now, this tends to be very theme-driven investing. So you have a theme and you know the kinds of names that you think are going to benefit from the theme you've identified, and then you go do the work and identify the companies that you think are going to be strong beneficiaries or very reasonably priced. Something that tells you want to play that theme in that way with that company. So that's top down. You can be bottom up, meaning that you're not thinking about macro cycles, you're not thinking about the macroeconomic backdrop, you're just trying to find the companies with the best operating fundamentals at the most reasonable prices you can find, and you're going to ignore all of that other noise. But I can tell you from firsthand experience, this notion of playing the players can really matter if you happen to be in a highly expensive or high valuation momentum stock, and you own that stock with a bunch of momentum players, people who use technicals, valuation levels, and whether earnings are coming through or disappointing. I can tell you when a momentum stock misses on the top line or the bottom line or both, it tends to be a bloodbath with a huge price correction. If a company is a value stock and it's traded sideways for a long time and it's cheap and it happens to miss, nothing may happen. So this idea that who the players are, if they're not momentum managers holding your stock and there's a miss, they could actually go up on an announcement like that. So it all depends upon the cohort that you're invested with. So you do need to be aware, who do I own this stock with? Because that's likely to have an influence on the investment and the way it's treated in the short term. Now, we at Wealth Plan, we have a handful of stock portfolios that we manage in addition to strategies that are allocated among mutual funds and ETFs, but we do have these direct stock portfolios. And we tend to be bottom-up fundamentalists, but we do have a thematic overlay as well, and we're certainly always trying to be aware of who we own a stock with. When those valuations get up there, you need to be prepared for the potential for volatility and prices to come down. And it may be the case that if fundamentals are coming along nicely, you're just perfectly comfortable holding something when the market is taking it down for some reason, provided it still fits with your investment criteria. And I guess maybe the last thing to talk about is you can be a fundamental investor covering things like we've discussed, balance sheet, income statement, statement of cash flows. Or you could be a technical investor going purely on price and looking at charts. Charts can be very informative. I recall many years ago a manager saying, we look at charts every Sunday night. That's what I do. I like to, before the work week begins, I like to review all the charts. And this guy had a granddaughter looking at his charts, a little 5-year-old sitting on his lap. Grandpa, what are you doing? Well, I'm looking at stock charts. And well, what are stocks? Well, they're investments. And when you put your money in them, if they go up, then your money grows. And showed the granddaughter some charts and said, now which ones do you think we want to buy? And she said, the ones that are going up. The wisdom of children. But it is true that you do want stocks to go up. The reason we invest in them is because we expect them to go up. And so, as simple as that is, if you're a chartist, and there are many, many layers and depths to technical analysis on charts, and people make decisions purely on charts. Now, if you're a chartist, by definition, you're probably playing the players because you're looking at the net activity of all of the people in that stock. So this has been a long sort of meandering discussion of all of the different ways we can choose to be an investor in stocks, playing the players, playing the stocks, or playing the market. And we've told you a little bit how we do it at Wealth Plan and the things we think about. The bottom line is, if you find yourself confused or bewildered or owning a stock portfolio that you don't really know why you own it or how you should trade it or who you own that portfolio with, it's probably a really good time to speak to one of our advisors. We've got them across the country, each with in-depth experience, a long tenure, and in a position to help you. So thanks for your time, and look forward to catching up next time.